Hi friends, Simit here from informedtrades.com. I want to take a quick look at some charts that I thought were interesting or at least worth mentioning and reviewing. On the screen right now, the S&P 500 we are at after yesterday's close above the 200 exponential moving average. That's this green line right here. We clearly, we were in a price channel. We broke out of it. We've had a swing low down here. We've cleared the 61.8 Fibonacci retracement level, and we are now, which is basically has confluence with the 200 exponential moving average. So we're still right at that level. Those who believe that we're headed down, and I think there's a lot of technical evidence for that, this is really the time to short. If you want to enter a short position, go for it. Personally, I'm not entering a short position. What I have done is covered longs because I see the technical signs that suggest the market's going to turn down. However, ultimately, I think it's going to keep going up. So I've covered some of my positions and left some of them on. I'm not initiating any short positions, though. Let's take a look at the weekly chart. Okay, one thing to note from the weekly chart is there's this trend line going back to 2009, March of 2009, the true low of all of this. And that's sort of still intact. And that trend line started here. We bounced off it here. We sort of bounced off it again here. Again, you could argue here. We've been in that trend line has been tested a number of times, at least once, twice, 3, 4 times if you count this candle here. That trend line has been tested. So one could argue that if that's not going to break, then we're still in the uptrend that goes back to 2009. However, this price channel going back to October of 2011, that is broken. That was why I covered some longs. I really would, to be convinced of a short, I'd want to see price clear this trend line. Or, to be convinced of, now maybe the time to enter short opportunities. If we can clear this line here, the 50 moving average on the weekly chart, as well as resistance at 2038, that may strengthen the case for some of the bulls. So an interesting short opportunity in one regard on the S&P 500. We're seeing a similar sign on the FTSE. Here, look at this. This is actually, if we're going to short, I think the FTSE and the Nikkei, which we'll get to shortly, I think are better short opportunities. Here we had a death cross on the FTSE back in July of 2015 and July. We had a bottom here, a low here in August 24, 2015, 61.8 Fibonacci retracement, and we've pretty clearly bounced off that Fibonacci retracement level, this green line here. Also has some confluence with the support level that goes back to here, January of 2015. You can see that the market really bounced off that level there. And now we're seeing a pattern of lower highs in place, right? The low that we had a couple days ago, October 19, is lower than the high that we had on October 9. So I think this could be an interesting short opportunity if you do want to short equity indices. Something else to mention, though, is that the equities are moving together. We're seeing that sort of, we saw that high, then we saw a low, swing low. We saw the 61.8 retracement, and now we're potentially heading back down. We're seeing that same thing on the FTSE that we saw on the S&P 500. If we go over to the Nikkei, we don't really see that huge retracement pattern. It really hasn't made, actually we can draw the Fibonacci retracement level. Here's the high, here's the low, and we've only got a 38.2 Fibonacci retracement level. So one could argue that in order for it to be the same as what we're seeing on the Nikkei, or on the FTSE and the S&P 500, we'd want to see a rally up to 19,384. However, we do see a death cross here. The 50 has crossed below the 200 exponential moving average. That's something that we also saw already on the FTSE. We saw that back here in July. And on the S&P 500, we saw that here in September. So we are seeing the death cross has now occurred on the S&P 500, FTSE, and the Nikkei. We've had a swing low and a 61.8 retracement on the S&P 500 and the FTSE. Hasn't occurred yet on the Nikkei. But either way, we have clear signs that global equity indices are rolling over. A death cross has appeared on all 3 of those. Okay, meanwhile, gold to silver ratio. Gold has rallied, has surpassed silver. We talked about how this was a potential short opportunity back here. That's clearly worked so far. we may, if we can rally back up to 75.3, or this line here, this dotted line here, dotted gray line, where the 50 moving average currently is on the 50-day moving average currently is on the gold-silver ratio. If we can get back to there, that could be an interesting short opportunity, which means we'd be shorting gold and buying silver. I just think that's interesting. We have a rally there. I'm not really trading the ratio. I'm long both gold and silver, although my silver position is pretty small. I mainly focus on gold. Speaking of which, we are now above. I just think it's interesting to note that we are above the 200 exponential moving average. I think it's been a great time to accumulate, to add to long positions. I have been saying that for a while, and that's been proven to be wrong. But again, this seems now to me like an interesting technical setup. We have a we have a low in July of 2015. That low, we've been making higher lows since then, right? We have a trend line in place. We are now above the 200 exponential moving average, and let's see if the market can sustain that position. Personally, I think if we fall back to 1150, that would also be healthy. You want to get a little bit of a retracement. That could be also a nice buying opportunity. However, overall, if I'm expecting gold to go past the highs that we saw in 2019, if we look at it, or 2011, at 1900 in 2011. So here are the highs here. I think we'll go above this, above 2000. So from that perspective, whether you want to buy now or you want to wait for the price to fall $20, it's still going to be a good situation if you're willing to hold for a couple of years at least. That's about it. Any questions you have, anything you want to add, join us at informedtrades.com. We have a lot of information meant to help traders and investors learn about technical analysis, learn about financial markets. So if any of the information presented here was unfamiliar to you, check that out, ask questions. If you like this video on YouTube, share it on Facebook, Google+. That also helps us grow and helps us make more videos. Best of luck in trading and investing. We'll see you next time. Take care.